Hey everybody, Tom Gentile. Welcome to Money Morning. It is Monday, June the 8th, 2020. Glad to have you here again for another Money Morning midday report. I've got a ton of stuff to work with you on today. So we're going to talk about the markets. We're going to talk about some stocks that I'm looking at as well. And Vegas reopened this weekend. So we're going to focus in on that area and why I'm betting on red for Las Vegas's future, at least for one particular company. So that and more in the next half hour. Let's go ahead and get started. So I am going to jump to my screen here. Let me share my screen with everybody. You can see where we're going here. All right, so James, and James, welcome to the program. Glad to have you here sitting in with us. Bill, good morning. Glad to see you. And guys, we got a lot to cover here today, so let me not waste any more time here. I want to, like I said, daily, intraday markets, all right? SPY, TLT, UUP, USO, GLD, and BTC. We're going to take a look at Bitcoin and see what's going on with it. I got stocks on the radar today. And of course, like I said, Las Vegas reopened this weekend, why I'm betting on red. So let's go ahead and rock and roll. Let's slide over here. We're going to get to this chart in just a moment. All right, I want to jump to the dailies before I start talking about intraday. So, and I got the big pointer with me today too, so that everybody can follow along with me. SPY, that's the S&P 500 depository, or more importantly, the ETF. All right. And so take a look here. All-time highs. We're going to keep seeing this until it goes off the screen. It's probably going to be about another month, and then we'll see it going off the screen. But hey, you know what? By the time this month is over, we might have not a V-shaped recovery, not an L-shaped recovery, but a check mark recovery might actually be in store. All right. And so anyway, guys, check mark recovery, perhaps. Although today was, we're getting better and better news coming out, and yet the markets are kind of responding less and less. Now, Friday's unemployment report, a mess is what I'm going to call it. A 10 million number mess. Going from what they thought we were going to lose in jobs to actually gaining, from thinking we were going to lose 7.5, 8 million jobs, we end up gaining 2.5 million. I mean, my goodness, I thought an analyst's job was to analyze data and reports. And boy, I mean, screw ups happen. Everybody's wrong. But to be wrong that bad, and that caused the gap that we saw in the market right in here. All right. But again, we had more good news that came out that the Fed is not going to do anything anytime soon with liquidity. And yet the market's just they're still in an inside day, which is shocking because this morning the markets were up quite a bit more than they are right now. So we'll look into that in the intradays. But here you go, daily of the S&P, and we're seeing this run back. Here's an area where we got caught between April, about the end of April to near the end of May, and then we saw the breakout. We've got that move back up. Area of resistance that I am focusing on is the 328 mark. That is right above where we are right now, about 8 points above. And then we're focusing on all-time highs for the S&P. Before I get into the rest of the markets, I want to show you a couple of other indexes. Dow Jones Industrial Average, okay? Here's the all-time highs, right around 295. Here's the coronavirus low. This is about 185. And look where we are now, 273. So we're not as high as the S&P, but take a look, if you haven't, at QQQ. QQQ hit new all-time highs just on Friday as we jumped above the old intraday high back here around 237. We went way above it, and we're up and hit 240. So the NASDAQ, all right, technology stocks are not only out of the red, they're now in the green. And all things considered, this is happening, still in a world with COVID-19. Now, the reason why they are where they are is because these companies adapted very quickly. It's very easy for technology to adapt very quickly. It's just a couple lines of code in some cases. but it's very easy to adapt quickly in technology. Not so easy for brick and mortar. All right. So back to my list again. SPY we took a look at. Let's jump in and look and see what's going on with the bond market. Bond market is recovering a bit after what happened on Friday. I haven't been with you guys for a week, so let's rewind. I talked about an area above 162 if it would hold. Well, guess what happened? All right. Tuesday, Wednesday, Thursday, Friday, we broke down below the 162 level and broke down as far as around 153 before rebounding, and we're currently trading above 156. Right. So right now we're on resistance. Although I do think we're going to fill this little gap right here. Right. Where we go from there, it'll take us looking at more than just this chart that we see here. But there is some resistance or some support below, and we did hold that support. We stabbed through it on Friday, but came back. Right. So the support level around 154 is holding for now. Right. What this says is that this warrants the move in the market. All right. I mentioned last week that if we drop below 162, that was a bullish sign for the market. All right. So if you take a look at last Tuesday, and let's just go backwards for a second. Look at last Tuesday in the stock market. Back up Friday, Thursday, Wednesday, Tuesday. We went above the highs of Tuesday, and the market went decisively below. The TLT went decisively below those lows, which helped propel the market to the highs that we see there. All right. So that's a big plus for the stock market. Moving on, look at cash. Look at cash. Now, if you were concerned that maybe maybe bonds were overdone and they needed a pullback, this right here told you that the markets were moving higher. Traders were moving out of cash. All right. Friday, Thursday, today, obviously Monday. Friday, Thursday, Wednesday, Tuesday, Monday was the telltale sign. And when we were talking, we were right at this edge. Well, later in the day, it sold off, and it just got worse throughout the week as traders got out of cash and got into stocks. All right. There's, look at the big men on campus. These are the hedge fund managers, Ray Dalio. All right. Stan Druckenmiller. These guys all said, and they're smart. These are smart people that I follow. And they were all on the short side of the market. Well, guess what? Like me, they figured out fast that they were wrong, and they got back to cash, or they started going long stocks. All right. And so I was short this market. I'm not gonna lie to you and tell you I wasn't. You guys all know. Just go back and listen to some of the archives. But I also knew how to limit my risk, and I knew when I was wrong to go ahead and get out of these short trades and then get on the sidelines and see what happens next. Remember, I don't trade what I think is going to happen. I trade what I see happening, and I trade what others do not see. And that doesn't mean it's a recipe for 100% winners. But when you see the same thing happening over and over and over again, that's the way I'm going to trade, win, lose, or draw. All right, so UUP to the side dropping, that means market's moving higher. Let's go forward. USO. This one was a real interesting one. You know what? This is the area where I want to draw down in, and I want to look at what's been going on for the last couple of months. So instead of 100 days, let's look at 30 days. 30 days of oil. In 30 days, actually, I need to go maybe a little bit farther back. Let's look at 50 days of oil. There we go. All right. Oh, this is the S&P. There we go. 30 days of oil, and you can see the low down here. All right. That S, that's the reverse split. That happened at 17, and that's the 17 after the reverse split happened. Since then, we've been creating these lower highs and lower lows. But things got really exciting right here around mid-May. We got the jump up. We had a little bit of a pullback, and then here is Memorial Day weekend. And, of course, boom, 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 we run up to new highs. And here we are, finally a little bit of a pullback, but even oil is on the run as what's occurring, all right? Things are starting to open back up. And Wall Street always precedes Main Street, all right? Always precedes Main Street. And the perception is that people are going to be getting out more. And that's going to create a demand for oil and gas, all right? And that's what we're seeing that's been happening now for the last couple of weeks. Okay, so that's stocks, bonds, currencies, commodities. Let's take a look at gold. Gold took a little hit last week, all right? Today, Friday, Thursday, Wednesday, Tuesday, Monday. Here we were last Monday. I said I know I said this. I'm going to say it again. All right. I was, and still am, by the way. I said this was the safest place to be right now in times of uncertainty. I still stand by that. All right. I have long-term positions in GLD. All right. What I've been doing is I've been selling puts to get long positions. And for a large majority of the time, I did not get any of these. So I got some back here. All right. But guess what? I got some more GLD put to me around the 160 area. All right. 160 was where I was selling puts. I got put at 160. Well, we're at 159.29. So I'm down about 71 cents from the last puts that I sold. But I got more than 71 cents for those puts when I sold them. So even though I'm down, I'm up. Okay. But I'm looking at this. I'm not looking at this as a short term trade. I'm looking at this as a longer term investment. COVID-19. All right. Social unrest. What's to come? Defunding the police? I don't know if that's going to happen, but let me tell you what I do know. When things like this get put out there into the Americans, there's always fear of the unknown. And when there's fear of the unknown, where do I go as an investor? I go into areas like, for instance, GLD. All right. This is going to be an entire year of unknown leading up to the election. So this is where I want to put some of my money, into GLD. You want to know where else I'm going? I'm going to show you where else I'm going. You guys all know this if you've been with me for the last couple of weeks. So let's go over to, let's go to Bitcoin.com. Haven't been there in a while. Bitcoin.com. I mean, can I just, all I'm looking for is I'm just looking for the chart. Looking for the chart. 7,500. These guys are behind. Okay, here you go. 97.18. Bitcoin's up 2.28% in the last 24 hours. But let's take a look at the chart. And what you're seeing here is you're seeing a chart just coming back from in the last week. So last week we had a spike up. This was right after the riots that happened, and President Trump decided to take a stroll down to St. John's. When he left the White House, all of a sudden we went from the 9,500s to 10,205. As soon as he got back in the White House, pretty much a day later, we dropped back down into the 9,475 area, and we've been in this area ever since. All right, I still see the long term on Bitcoin as a great alternative asset. All right, so we'll keep an eye on this one, and we'll look at it from time to time. But, you know, we had a hard fork. All right. We had that hard fork that happened in May. We had the royalties or the rewards for Bitcoin got halved. And now we're moving towards even more things as we head into July. We've got even more reasons that you're going to see less on the supply side. And again, as more and more things happen, both here and abroad, all right, and as we get into more of the unknown, I think that's just going to make the price of Bitcoin move higher. Again, investment for me, not trade, investment. There's a difference between my trades and my investments, right? Let's take a look at quickly some stocks in the news, and I'll do that with the intraday. SPY moving up to its hourly highs. The high for the hour right now, or for the day, is 321.21. That was the hour, the opening high that happened in the first hour of the day. Low is 319.69. Let's see what's carrying that. What's TLT doing? TLT is actually getting a bit of a move to the upside as it moved up during the first hour of the day and is holding steady up here. So maybe this is going to be a stock and bond bullishness or bullish trend. UUP, the most stable place to be, and stability is on its way down. Now, if this drops, this is going to be a positive for the stock market, and it's already close to its lows right now. USO, what's happening with United States oil? Well, it's had probably one of the widest ranges of opening. If you take a look what's gone on in the last week, these are skinny between the first hour open and close. Skinny, 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 skinny on Friday. And then, of course, here's what happened today. All right. I want to show you something else, too. Look at the last 4 days. All right. If I were to kind of share them with you here. All right. Look at this opening range. We blow up and get higher. So the trend was up last Monday. All right. Look at Tuesday. There we are. We hit the top and we move higher on Tuesday. So buying above these little 1 hour highs for Monday and Tuesday look like winners. How about Wednesday? No, because Wednesday told you to go short, and then it flip flopped and it was all over the place on Wednesday. All right. How about Thursday? Thursday was another day where you saw some moves to the upside and sustained runs. And then, of course, here we go. Friday, another move to the upside and profitability for the bulls. Today, what's it looking like? Well, we had a pullback from 29 down to 28.16, and oil's down about a little more than 1.5% at current levels. But this is an area where if you're looking to see extended moves to the downside, 28.16 would be where it is. All right. Stocks that I'm looking at right now that I find very, very interesting. Is it NCL? Not NCL, but you know what? Let's look at RCL, Royal Caribbean. Royal Caribbean. This one is, my goodness. You know what? I'm going to go back and look at a day chart on Royal Caribbean. I want to look at Royal Caribbean. I want to look at a couple of different stocks here. First, look at Royal Caribbean. This cruise line was trading at $135, went down to $19. Obviously, everyone knew that the cruise lines were going to get some help. All right, but they're just now starting to create reopenings, and we're seeing $19.25 go to $72.20. In fact, it was actually higher. It was around 75 earlier this morning. And I mean, we're talking about probably one of the worst industries, and yet this has come back a good 50% from its lows. All right, big move. I mean, they're just pushing it higher, pushing. All right, take a look at this. DAL, Delta Airlines. Delta Airlines went from a high of $63.44. This was last summer. All right, look at the coronavirus high. All right, coronavirus high in February was probably around $60. Went to $17.51, and that wasn't even in March. That was in May, before rebounding and now trading at near double its value. Look at that move. That was in a month, double its value, and now we're sitting up here in the 38s. The news is that pilots want you to start booking your trips ahead of time. You know why? Because 7,000 of them are losing their jobs over at Delta, and of course, they're trying to hold on to as many of these pilots as possible. This is not just a problem at Delta. This is a problem worldwide. But Delta's taking steps to cut their staff because they know two things are really two of their expenses. Their biggest expenses are labor and jet fuel. And with the price of oil even still lower now than it was quite some time ago, that's lower than it has been. And the fact that they're cutting staff, that's obviously going to be lower too. So they're trying to cut costs to keep themselves in not so much profitability, but to be losing less than the street may expect. All right, so we've looked at a cruise ship, we've looked at an airline. Let's look at one more. All right, and I want to take a look at this one in a little bit more detail because we're going to take a look at it big, and that's Las Vegas Sands. Nearly $75 back at the beginning of the year. Low of 33. And where are we right now? We're up another 3% today, $54.62. What is going on in Las Vegas? All right. Let's see. Can I cue the music? Cue the music for Las Vegas. There we go. All right, so we're going to talk about Las Vegas right now because the Strip is open. All right, Elvis, that's enough. The Strip is open, and here's the thing. I went and looked at EarthCam over the weekend on Saturday and Sunday. There wasn't a lot of traffic going on, guys. You know, this is mostly locals that are out right now, and locals don't visit the Strip anyway. If you want to find the locals, you got to go down to Fremont Street. Okay, that's where the loosest slots are. That's where the best deals are, and you know, hotel prices are still low. The problem is that, think about this. If most of your revenue in Las Vegas in entertainment and hotels and casinos, all that revenue is coming from where? Out of towners and conventions. Well, the conventions are dead. They're DOA right now. And out-of-towners, well, if companies like Delta Airlines are only flying at 40% capacity, and you know that the number of flights, I don't know where you live right now, but, I mean, I spend a part of my time in Sarasota, all right, in the Sarasota, Florida area. And Sarasota Airport typically would run dozens of flights, not hundreds, all right, dozens of flights. And they have cut back a lot of their flights considerably. And most of the time now, the only place you can go nonstop is to Atlanta. And you're going to Atlanta whether you want to or not, pretty much to get to anywhere. Now, those will slowly open up. And I'm not saying that that's the only place that they're going from Sarasota. They're going to other places. But I'm just telling you the majority of flights have been postponed, canceled, rerouted, consolidated, and for small companies or small airports like Sarasota are routing to the nearest large destination, which in that case is Atlanta. What can we learn from all this? All right. Well, businesses cannot run on a fraction of capacity, and even if they get government subsidies, they're not going to continue forever. All right. So which hotels in Las Vegas will suffer the most? So what I did was I went to my site, tomsoptiontools.com, and I ran a report. All right. I ran a report. I went and looked at all hotel and entertainment centers, and I stripped away any of them that had nothing to do with Las Vegas. And it's not because they won't fall, because worldwide this is a problem, but it's going to be especially a problem in Las Vegas, because Las Vegas relies on the tourism industry. That's pretty much what they do. All right. And so when you look here, this particular chart you see represents the top 10 hotels and entertainment centers that operate in and around Las Vegas, right? Look at Wyndham Hotels and Resorts for a moment. Now, Wyndham probably has the smallest footprint in Las Vegas, which is probably why it's rebounded the most, all right? All the way over to the right-hand side, you're going to see a number, and that number is based on, first of all, what I did was I went back to the beginning of the year, and I said to myself, what's the high, what's the low, and where are we at right now for the year? All right, so the high for the year for Wyndham was 61.31. The low was 51.87. We are 76% on the range between the high and the low. So we're higher than we're lower. You look down here at the bottom, there's Las Vegas Sands. The high 74.06, the low 52.97, and 42.03 represents the percentage. I'm sorry, high was 74, low 37. Right now, as of Friday's close, 52.97. So we're 42% off the low, much lower than 76. The other thing is that as you go down this list, Marriott Vacations Worldwide, obviously the term worldwide helps them. Grand Vacations, Wyndham Destinations Worldwide. Then there's Wynn Resorts. Obviously, Wynn Resorts does operate out of Las Vegas, but a lot of other places as well. Hilton, Marriott International, MGM, Hyatt. The only one of this entire list that has the word Las Vegas in it is Las Vegas Sands. That might be a lot of the reason why they're hurting, because all of a sudden the brand that helped them so long is now starting to hurt them. Let's take a look at this number 10 number here, which is the worst in Las Vegas, and let's dial into it a little bit more. All right, so Las Vegas Sands is the developer and operator of world-class integrated resorts, meetings and convention centers, and casinos. World-class resorts, well, that occupancy number is way down. Meetings and convention centers is almost non-existent. And casinos, well, I mean, I've seen them. I've seen the videos. I've seen the pictures of some of these casinos, and they're just not happening, guys. They're opening off the casinos. They're partitioning off tables. All right. Slot machines. Every other slot machine is open, and so you look at those, and you see that right there. That's 50%. That's 50% off the top in slots. Blackjack tables. They're what used to be 8 people could sit at a table, and then you got people leaning over. Not anymore. 3. That's it with the plastic, plexiglass partitions. And what's worse, when you look at the news stories on LVS in the weekend, they got another problem. They've got a potential money laundering situation. All right. That was the top two news pieces that I saw over the weekend. All right. Taking a look at the chart of LVS, we can see that that this area right here, all right, high to low to, look at this, 50%. The 50% retracement is right at the $55.87 level. So how do you sell Las Vegas? All right, where's Elvis? Elvis, tell us about it. Bearish Las Vegas. All right, if you're bearish Las Vegas, how do you sell this? Well, you can short the stock, you could buy puts, or you could buy put spreads. Let's take a look at all three. Shorting the stock is probably the easiest thing to explain. It just involves taking a look at the stock and going short. So if we were to come over here and look at Las Vegas Sands, if we were to short the stock right now at 54.63, anything above that would be a profit. Anything below that would be a loss. All right, how do you short stock? What does that mean? I'm sure some of you that are watching this presentation right now either don't know how to short stock or have never shorted a stock before. I'm not preaching that you do, okay? That's not the case. What I'm telling you is that shorting stock involves borrowing it from your broker and then selling it on the exchange in an attempt to buy it back cheaper and give it back to your broker, and then you profit in between. So you're selling high and then buying low. That's the idea, all right? A lot of risk if you're wrong. A lot of reward if you're right, at least all the way to zero. All right, but there is another way you can do it. And the other way you could do it would be to buy puts. And so if we were to come over to the option table, let me go ahead and update this bad boy right now. Let's look at August 21st, for instance. August 21st, there are 19 different strikes, and there are 74 days to expiration. I see that. All right, if I go ahead and update this right now, I can see that, let's drop this to 20%. Let's drop this to 20% below. If you're expecting perhaps a 20% dip in Las Vegas Sands and you were to buy the at-the-money options, the ones that are at-the-money puts, the puts are right here. These are the puts. Let's say I bought a 55 put. I'm going to pay $5.58 for that. All right. So that's $558 plus the small commission you might pay. What's your cost and risk? $558. What's your reward? Well, this $4,942 is if Las Vegas Sands goes to zero. And because that's probably not going to happen, we have to get an idea where it is likely to go. So as I'm going down here on the chart, right, if we see a pullback, let's say we get a pullback to 45. Where does that sit on the P&L graph? Well, this is your P&L graph if you were long the puts, right? If the stock goes up, the worst case scenario is you lose the $558 investment. But if it goes down, let's say it goes down to 45, what do you stand to make? Well, if it were to happen today, you'd probably be sitting on a double. If it were to happen by expiration, however, you'd maybe get $400 for a cost of $558. Right? So that's how you have to look at this. Is there something better? Bear put spreads make sense because what a bear put spread is it allows you to buy that higher strike put. There's our higher strike put we're buying, the 55. And let's say we come down and we sell the 45. So buy the 55 and sell the 45, all right? Now what that does is that brings in a little bit of money on the 45 to help offset and pay for the 55 put. So now we're not paying $558, we're paying $366. A position that's $366 that could, hey, more than double in value. In fact, we could get perhaps 173% doing it this way. What are we doing? Well, here it is right here. Let me open this up a little bit more for you. And again, this is not a recommendation, all right? But what I'm looking at is I'm looking at buying the 55 puts, selling the 45 puts, and doing that for a combined cost and risk of $366, right? This is what this particular position looks like on the risk graph. So here's your risk graph right here, all right? If Las Vegas Sands goes up, like in the previous example, I can lose money, but now I'm only losing $366. If it goes down and it goes to 45 or below, I can make as much as $634, all right? But guess what? Our break even is much better. Here's our break even at expiration. Our break even is at right there at the $45 level. All right, even below 45, it's actually the break even downside is actually sitting at $51.34. So all three of these positions that I just showed you, okay, all three of these positions, shorting stock, buying puts, and buying a put spread, are all they are all bearish positions. However, they differ in so much that some of them have a much more of a risk than others, and some of them cost less, some of them risk less, and some of them have a better looking reward. All right, guys. So this is all part of details that I did today that are on my YouTube channel. You can take a look at it for more details on what's going on, all things markets. And again, guys, I want to thank you for being part of the program today. I will be back again next week, and we will talk about, again, more information and midday stuff that's going on in the markets. Last thing I'm going to leave you with is this. I say this in nearly every webinar that I do. 90% of traders will trade what they think the market's going to do, which is consistently wrong. 9% of traders will trade what they see, which is better, but it does have some inconsistencies. 1% of traders are rules-based. They do not trade what they think. They trade what others don't see. All right, guys? So thanks again for joining me. I appreciate you hanging out with me for the day. You know what I'm going to do? I've been doing, and I'm going to do something with this next week. Let me see where we're going with this, but I've been doing a lot of work on the Peloton. All right. I got a Peloton for my wife for her birthday, and I end up using it more than she does. Now, it's not because she's not fit. She is a whole lot more fit than I am. But she loves the treadmill. She doesn't like the Peloton. All right. I like the Peloton. I'm not crazy about the treadmill. It hurts my knees. So I'm going to do a session next week, and we're going to focus on Peloton, the stock, not just Peloton, the actual product. The product is great. Let me set you up for this for a moment. All right. The product is great, and I'm able to see the actual numbers of people that are in live events that are on demand, and those numbers have gone way up. But has the stock gone up too far? All right, that's something we're going to talk about next week. Guys, thank you. Enjoyed it. Have a great rest of your day. I'll see you again real soon. Bye now.